All right, welcome back to another episode of In the Charts. I'm going to kick us off this week, and we are going to talk about privacy. Let me see if I can share my screen. Okay, can you guys see this beautiful Zcash chart?
We can.
Awesome. Okay, so it's kind of crazy. Like, I don't think we've seen a crypto chart like this actually in a long time. This is not the all-time chart. This is literally just the year chart for Zcash. Basically since mid-September, it has 15x'd. And so I thought this was a good time to maybe mention like what is Zcash and like what does it stand for. Um, Obviously Zcash is a fork of Bitcoin with privacy enabled features. And it actually like brings me back to fond memories of my early days in crypto when I was working at Coinbase. There's an amazing podcast that NPR Radiolab did called The Ceremony, which is like an hour-long episode that's detailing the keygen ceremony of Zcash, and it's got a bunch of interesting characters in it. And so anyone who's interested in privacy or like Zcash, highly, highly recommend it. Um, but looking at this chart kind of made me want to look back and see what the actual statistics on Zcash look like. So I wanted to check out another chart that shows some characteristics of the network. So this chart shows the shielded supply of Zcash. So as a reminder, in Zcash, there's two types of transactions. You can have unshielded transactions, where if you actually send coins on the network in an unshielded way, anyone can see them, just like on Bitcoin. But if you shield your transactions, then you actually get some of the privacy features. So the constraints for how private the chain actually is based off of how big the privacy set is. And as you can see throughout the history of Zcash, like less than 10 or 20% of the actual total coins have been shielded. But now in the last year, we've seen a big rise. Something close to like a third of all of the coins in Zcash are currently shielded. So not only is the price running up, but actually like the privacy characteristics of the chain are getting stronger. But if you look at how many people are using the chain, there's not very many. There's only like 17,000 transactions in the last 24 hours, and only like 3,000 of those are shielded. So despite this narrative of privacy being important and back, it doesn't seem like people are actually really using privacy for payments. It's more so privacy store of value. And that kind of got me thinking, because we started to get some pitches on the stablecoin and payment side about the necessity for privacy, right? There's always been this narrative that for certain consumer and enterprise uh, payment needs, you need things to be not fully transparent on a blockchain. Um, but it still feels like we're early days. And so I wanted to kind of open it up to you guys and have a discussion about how do we see privacy emerging and evolving on blockchains, and especially on the payment side of things.
Can I just say that it's kind of interesting that privacy and Zcash, well, that the Zcash price starts running, and so it's obviously a private chain around the same time as we had the sentence of Keone Rodriguez, right, the Samurai Wallet developer, being sentenced to 5 years in jail, and obviously, like, if you read those articles and if you read the transcripts from court, you see this undercurrent of the judge saying or implying that there are no legitimate uses for privacy and that all privacy is bad. And so I find it fascinating that these things are simultaneously like happening. My read
Yeah,
on the
there's like this
Zcash,
implication of like good privacy and bad privacy, right?
that's right. And so privacy, we know that for a long time is not a priority for consumers. The only company that has truly been able to actually sell privacy has been Apple, but it's on the backs of an amazing product set that is so personal and so in your face that if this thing ever even, remotely seems like it's not private, they would have a lot more to lose. And so it's not one of the core sells. It's a differentiation against like the all-seeing eye of Google or the all-seeing cloud of Google. But just to say that the Zcash, I've been accompanying the team that has been behind like this is resurgence, and it's a small set of folks that has had major impact. And I think it's honestly the other side of it's the upside of a low float, low FTV chain, is that it actually, the amount of volume that you need to kind of like drive it up is actually not that high, but it has been crazy. It has been unexpected. Seems 2 months in a row And it's kind of exciting. I hope that what we have is a narrative following price, in that this price action, even though obviously like concentrated on a few sets of folks that decided that this was the right team and the right technology to get behind and really like push, amp the marketing, amp Zashi as a development wallet, amp all of these things in the ecosystem that were just not being done. And that reflects into, excitement for the price, and candidly, like obviously like a price that is just going up extremely fast, and hopefully that actually privacy follows and that this sticks around and this is not just a short-lived type of price appreciation and decrease.
But do you think that Zcash will be the place that people have private payments? Or do you think that they will just be this like pusher of the narrative and privacy will actually live elsewhere? And in a way that everyday, it's Chris's mom won't use Zcash, but she might use.
We're back to using Chris's mom as an example. Well, if I had to bet, by the way, if I had to bet, I would bet that it would be this pushes the narrative more than pushes the product. The reality is that Zashi is a great product and much better than everything that came before on the Zcash ecosystem. But as an app, still pretty featureless, hard. Right now, the way to get there is through near intents, which have been operating fantastically, and this is the majority of the volume of near intents. But there's like difficulties there, and even Zashi itself is depending on a blockchain that takes a long time to sync. So if you don't open the app for a few days, you have to wait literally sometimes like 15 minutes or 10 minutes for it to sync. Of course, there's Typhoon and all these changes that will compress that, and so the team is now very quickly like iterating because they have product market fit. So it's their time to shine, and so I believe that they'll be capable of doing it, but at the same time, I'm generally of the conviction that there's a lot of teams going after this, and distribution and the better product experience is the most important thing, and that you can add on security that is enough, you cannot add on enough privacy such that the majority of users will kind of like take on whatever like the most popular wallet is, if they claim that they're private. Sort of like, remember that Telegram was really private for a very long time in terms of end-to-end security, and yet it completely dominated Signal. Signal is the best implementation. It is quantum safe. It has all the ratchets. They literally invented the protocols. Moxie did alongside, Trevor Parent, I believe. And all of a sudden, like Telegram is over 1 billion users, and Signal is like the niche crypto thing that only the cool kids use. So I think that may be a little bit of the outcome here.
Yeah, even so, I think there's maybe two ways to segment this. There's the B2B and the B2C. So maybe touching on the B2C first, Diego, you I think nailed it. Apple's really the only company at scale that I think has been able to sell privacy. But I would argue they were able to sell privacy because they actually figured out a way to make it more convenient. Basically, the way that at least I use Apple's privacy features is when they ask me to sign up for something and I get to use the Apple hide my email and rather, instead replace it with some random string email, I use that. And the reason I use it is because I don't want to get spammed. I 100% know that if I put my actual email into this field, even if I never signed up for it, my Gmail is not going to be filled with like 10 emails from them over the next week. And like, that's really annoying to me. And so that's why I do that. And so they were actually able to wrap privacy into a more convenient feature for me, which really resonates. So I still think, I mean, people have said this for a really long time, but I think that's a good example of how privacy and convenience actually were a good fit for each other. And therefore, people use that feature a lot. I think on the B2B side, it's a little different. I would guess it's a little bit different. I'm not sure that enterprises really want all of their stuff. Like if they do end up sending many, many payments on chain, I don't know that they would want those things to be disclosed, especially when you start getting into things like payroll or more sensitive information like that. And so I do think that something will have to change. I'm not sure that it will be Zcash, but there has to be some probably answer to that question for B2B use cases.
Yeah, my hunch is that because of the loaded, there's something loaded about privacy on chain that I think opens up regulatory and legal questions, like to Diego's point about the Samurai Wallet guys and Tornado Cash. That my guess is that despite B2B workflows needing privacy, they might be slower to adopt. And consumers that might need privacy might be faster. So I could definitely see the like crypto card movement. Everyone's now starting to use cards on their stables. Like you don't want every single transaction that you make to be fully public. Like that that resonates for me, but I don't know if the average consumer that doesn't even know they're using crypto and thinks they're just using dollars cares about privacy yet.
Not
So
only that, there's all sorts of things that you have to depend on for infrastructure for these successful apps. I mean, think about all the very popular cards are all dependent on these card programs, which are dependent on the actual orchestrators, and all of them have to support these things on a shielded basis for this to actually truly be private. And I know from Anchorage, look, it has been hard enough to build a crypto company that is a regulated bank for the past 8 years without having the conversation about the nuances of like shielded transactions and transparent transactions. And I've had them with all the regulators. And so it's just like, we're finally at a point where we have the, tailwinds and the industry is progressing. So kudos to the team and kudos to the people that are actually putting this together. Might now be the right time to now have this conversation, maybe within the Trump administration, the next like 2.5 years or what have you, to kind of like get this done, because we may not get another chance. So now might be the perfect time. But still, like, the reason why these things haven't happened is because they're strictly harder to do than the thing that we're currently doing. And for a long time, we've been struggling with the ability to do it.
And the current thing is already hard enough.
Yes, the current thing is already hard enough. Also, I want to point out that Chris said this doesn't happen in REC meetings, only on podcasts. That Chris says that Diogo totally nailed it. There's no way this has never happened in an IC meeting. It was like, oh my, Diogo is totally right. Never.
It's all for show.
It's just
all
for the
for show.
audience. It's for the like 6 people who actually watch this thing.
I'm gonna start doing the IC meetings here on the podcast live to see if I get more support on my investments.
All right, what do we got next?
All right, let me go next. All right. So I think we should, it's been almost a month now, but I think we should talk a little bit about what happened on October 10th. And I think it's a good time to talk about it now because there's been some amount of time that's passed since. And yet we're, I think, still feeling the effects of it. So I think it's still relevant today, but we have a little bit more of a sense of how things have shaken out since then. This chart in particular just shows, I mean, there's lots of ways to analyze what happened on October 10th, but I just chose one kind of proxy. And this shows open interest from October 10th through October 11th, early hours. And you can see that the peak of open interest on October 10th around 2 p.m. was around $147 billion. And then you see this massive drop off into, about $110 billion of open interest in the early hours of October 11th. And we know a little bit of the story of what happened, right? A lot of some of it's come out. We probably don't know everything. We won't know everything for a little bit longer. But clearly there was a lot of auto deleveraging. And so as basically, I think it shows that there was a lot of leverage in the system, B, a lot of this stuff is automated. And so these kind of violent swings are probably here to stay in some form. And then the other thing though, is that we're still feeling the effects of this a month later. And you see this in the charts in the price movements for basically every crypto asset, including Bitcoin. Everything's pretty much down like 20-30%, with the exception of course, things like Zcash or a couple others that have caught a unique narrative. So I wanted to just pause and just talk about this a little bit. I'm sure you guys have some thoughts around what happened on October 10th, the implications of what this means for crypto markets in general a month later. So yeah, I just wanted to give us some space to talk about it.
Yeah, I think one of the ways in which I think this was received by me is like, I think we've had this narrative of like DeFi is holier than thou, and TradFi sucks and DeFi has behaved correctly in every single downturn of any magnitude. And people are always looking at look at how well we did. We did not do well here. And not only we did not do well here, in the past, 48 hours, we've had 2 major hacks, 1 stablecoin depeg. We've had like all sorts of issues, which is, DeFi being punched in the face again. So to me, I think it's actually it's the continuation of this, we're in this swing to, turns out DeFi has a lot of inherent risks and carried risks. And this is new tech, and new tech that is actually behaving very differently across even the same types of products, right? When you are in an exchange, There's regulations, so generally they operate the same. When you're on a perps exchange, turns out that they can do ADL however the hell they want. They can implement oracles however the hell they want. And arguably that which should be transparent enough for people to underwrite, but people just look at these interfaces, they all look the same, and so they expect these things to behave the same, and they just don't. And so the complexity that is hidden away is so much. And also with these hacks and DeFi, all the complexity of the web of connectivity tissue than what is actually implicated at the end of the day. And how many rumors are still like going around about like who's insolvent a month later after this. I think it's a little bit of a counter narrative on DeFi is holier than thou, which, I still think carries water as a narrative, but we've been punched in the face.
Yeah, that resonates with me, Diogo. Like, I think this is a pretty clear reminder that DeFi is still downstream centralized exchanges. Like, price discovery still largely happens on Binance. And so if Binance's APIs goes down, there's like a crap ton of things that will happen that we will be affected by. Both on the liquidity side. I mean, so much of DeFi relies on Binance prices for oracles. Like, there's just like so many cascading things that can happen here. And especially when you throw leverage, like when a lot of these things are levered up to Binance's price discovery. I think it's just a good reminder that leverage is generally something to be cautious of, and that liquidity is king for a lot of these markets. Unfortunately, I don't know if there's a world where there's going to be less leverage in crypto. Like, I don't think that's a reasonable solve, right? Like,
no, I mean, we started doing perps trading competitions. It only gets worse.
Yeah, totally.
Here, right?
well, it's just like, in any bull market, I think leverage is going to enter into the system. Like, it's just going to happen. There's going to be like times of market expansion and then times of market consolidation. If you're building DeFi protocols, I think it's just having more of a tinfoil hat to be prepared for these types of situations. But how can you be prepared for the black swans like this? Like, you still haven't really learned our lessons.
Yeah. I mean, this time Diogo and Breck nailed it. I think
never happened to you in an IC meeting either, Breck.
Yeah. I think that's right. One thing I was thinking about was this year, like if you zoom out, this year has been great for crypto. Like generally speaking, we have a friendly administration in the US, we had the Genius Bill passed, there's a lot of activity that's growing on chain, and yet the mood has been very bad. And I think people that are in the business of speculating on assets haven't really had a place to do that because the narratives have been fairly bad all over the place, except for perps. And so I think a lot of that risk capital that was typically like more spread out across various areas of crypto have really concentrated around the perps narrative and, the perps activity and trying to get more points, get more, basically that's where a lot of that speculative activity was focused. And then of course, like I agree with you, Breck, where I don't think we'll ever eliminate leverage from the system. Like, and I don't know that we should. It serves a purpose, but we should expect that, of course, like whenever you combine leverage and volatility, we'll have moments like this. It's just another good reminder of that.
Leverage, volatility, and new products, right? Let's remember that
products,
a lot of these products are new, and the implementations have a bunch of characteristics and requirements that just we didn't have in traditional finance. So we're trying to build systems that are fundamentally different. But one thing that you've said was really good and actually segues perfectly into my chart. So I'm going to show you my chart, which one thing that you said is like in crypto, there's this fundamental divergence between the feeling and how it's actually objectively what's been objectively happening for crypto, where you've had these tailwinds, but somehow the feeling is like worse than it's ever been. And that is actually not just in crypto. This chart is a chart where on the x-axis you have time, on the y-axis you have price of the S&P 500, and you have two lines. One is the S&P 500 month end price in green, and the other line is in red, the expected financial situation. So the feeling in a poll 5 years ahead from now, are you going to be worse off or better off in terms of your financial situation? It's a poll of Americans done by the University of Michigan. And so it's kind of like 100 is break even, above 100 is better, and then under 100 is worse. And what it shows is that from COVID on, COVID was a perfect event where everything was basically correlated, moving in stepwise function. They were basically like the same line, or roughly, with very, very high correlation, and they are completely divergent post-COVID. Post-COVID, we are now in a situation where recently we crossed the 100 mark. So people expect their financial situation 5 years to be worse than they are right now, while we're on a massive bull run on the S&P 500, which was around 3,000 and now sits almost at 7,000 all-time highs. So this is kind of interesting because it's not just crypto that is having this major divergence.
There is one thing that I don't think this is the core reason, but one thing that came to my mind was that when people talk about sentiment, I think people overvalue stability. So I think when you feel like you can predict the next 5 years, then I think you'll feel better about it versus if you don't feel like you're going to be able to predict the next 5 years. Like the volatility and the unpredictability, I think generally is perceived as a negative thing rather than a positive thing. And I think that's part of what's going on here in the red line, which is during COVID, everything that we used to know just kind of went out the window and you have to adjust to the very new thing. And then you adjust it to it. And by the time you adjust it to it, you have to throw it out all again. And then you have to adjust to a new thing. And, that's like now coming back to the office, but like, you had settled into life remotely. Maybe you had like moved places, whatever. Now you got to go pick up your life and go somewhere else again. Egg prices are through the roof, whatever, like high inflation. But then now there's, trade wars and maybe like a shifting geopolitical landscape. And so there's just a lot of volatility, chaos, unpredictability in the world, which I think many people perceive as a bad thing. But it's not clear that it is actually a bad thing. Like obviously you won't be able to know what the what do you call it? The missing the word for it.
Counterfactual, right?
The counterfactual, yeah, the counterfactual. But it's I'm not sure that unpredictability is necessarily a bad thing, but I think it reflects heavily in sentiment.
Yeah, I mean, this chart just looks like a bubble to me. Like this is like probably what defines a bubble. And the only thing I can think of is like post 22. You can like see where ChatGPT was launched. It's like at the bottom of the 2021 cycle. Like that's probably right around when ChatGPT came out. And then it's just been up only on the S&P. I just asked ChatGPT what percentage of S&P 500's growth in the last 5 years comes from the Mag 7, aka like all the AI spend. And it's like 60+% as a rough estimate. And my guess is on the other end, Chris kind of nailed it on the head here. There's been a lot of volatility in terms of like what's been happening on the news. Plus, the prevailing winds is like AI is going to take everyone's jobs. So everyone's expecting to be replaced over some, future time horizon. Meanwhile, all of the gains in the S&P have been concentrated in these like 7 companies, the majority of which have a lot of upside riding on AI. And so that's the place that my brain immediately goes to when I see this chart. I would be curious to see if like in previous bubbles there were similar divergences. Like
That's what I was
in
thinking.
08,
Like, can we see 08 mapped
exactly.
here? Yeah.
Exactly.
But shouldn't it be the opposite, where like sentiment should outpace the performance for a bubble?
But a bubble automatically or like artificially means that like there's propped up performance, right? It's like performance that's not real. I'm just imagining like that scene from whatever, the Big Short, where housing prices in Florida are through the roof, and it's like a bunch of dancers in Florida who are like, no one lives there anymore. Like,
Well, but I would
cheap.
argue that Chris is right. The sentiment would be I'm going to be rich, and so the sentiment would be extremely high with those people, which is not what we're seeing here. Actually, what we're seeing here looks closer to like a bubble in the sense of this is an inflation-led market, where inflation erodes consumers' prices ability. You feel worse, but it also like Tina, there's no alternative. So people put money in the stock market. It's all passive funds. It's all up into the right. The people with assets continue like having their assets ride high because it's inflation resistance in the attempt to escape the dollar, and your dollar is worth less. And so the general population is actually feeling like this is
feeling worse.
Yeah, I just think about it like the average, like, if any financial gain follows a Pareto distribution where like the top 20% make most of it, like if you're in the top 20%, like, yeah, of course you feel like you're rich. But like right now in San Francisco, if you're not in AI and you're looking at trying to buy a home or a new apartment, you're like, what on earth is going on? Right. And so I'm imagining like that's the type, like the average person on the sentiment chart probably isn't feeling like things are amazing.
So
And relatively, they're getting screwed.
after this episode, we're
A la
unfortunately
Mamdani, right?
Yeah. Breck is an investor in crypto, not AI, and thus we're going to create a GoFundMe campaign for Breck to buy a house in San Francisco. I will put the link at the bottom, so please
man.
contribute.
Please.
Next
Oh my
week, Breck,
God.
your virtual background should be wherever you need to send the Venmo or whatever the GoFundMe link
I'll
is.
have a,
Just have it
I'll
up
have
the
a
whole
QR
time.
code. I'll have a QR
Yeah,
code.
it should be a Shulid address on Zcash. Nobody will know how much money you've raised.
The Breck Assistance Fund.
That's right. Well, that was another amazing episode of In the Charts. I'll see you guys next week.
Awesome. See you guys. See y'all.